Hey guys, this is the first Hawaii real estate news now. Kind of finishing up March here. We're going into the April 2018. My name is Lane Kawaoka, and we got Dean Ueda there. Say hi, Dean. So your face comes up.
Hey Lane, how's it going?
So today we're going to be talking about four things: market stats, some key things to watch, interest rate report for you guys who are interested in the numbers there, and other cool notable economy news. So let's get started. But before we get going, just to set the expectations, we're just a couple of real estate guys. This is a disclaimer here, but I think between the two of us, we've probably bought $100 million worth of real estate between the two of us. So, and it can take we know a thing or two, I guess. So I wanted to introduce myself before we get going. I have a blog, simplepassivecashflow.com, where I talk about my real estate investing. I've got a bunch of Facebook groups. I run the Hawaii Real Estate Investing Club, Hawaii REI 808. And I have a podcast, Simple Passive Cash Flow. I'm found on iTunes, Google Play, and Stitcher. And also come and join the meetup, guys, if you guys are local to Hawaii. Dean, why don't you introduce yourself to the folks out there?
Hi everyone, Lane, thanks for having me. My name is Dean Ueda. As Lane said, I'm a avid investor, and I'm a real estate salesperson, and I also have a day job as a financial analyst in the private sector.
Still working the day job too.
Yeah, still scared to pull the trigger.
Yeah.
Okay, so guess it's me first, right? So yeah, I wanted to start off talking about the Oahu real estate market statistics, and this is a sheet that a lot of the Oahu public are familiar seeing. This is information that's released to the public on a monthly basis by the Honolulu Board of Realtors. This information is a little dated, as you can see. This is February 2018. The March info isn't due to come out for about a week and a half. So one thing that I wanted to point out, and that some newbies might question, is why do they use the term median so often? And mainly, median is used versus the average because of the large multi-million-dollar transactions that would skew the data when you use averages. So median is a better indicator to use for statistics when it's not a normal distribution.
Yeah, because it's like the average is like, you have all the rich people with $10 million homes, it really skews that average upward.
Right, totally. Yeah. So like if we were to, and then that information is also available too. But if you look at that, like for February, I think the average is well into the 900s for the median single family, which is crazy. So and keep in mind, whenever they put out this information, the comparison is from the same month of the prior year. So in this case, it would be February 2017. I mean, that's mainly because of seasonality, right? If we were to compare it to January, it wouldn't be as meaningful. Like in our case, for this, February is typically the slowest month of the year. It makes more sense to compare to the prior year. So yeah, these statistics are very high level, always like the beginning talking point, kind of like when you're talking about stocks, you start off with the Dow Jones Industrial Average or the S&P, right? So I wanted to talk a little bit about these other two statistics that are called indicators, I guess. And first one is days on market. And this indicator measures the number of days for when the property is first listed until an offer is accepted and goes into contract. Let's take a look at some data on the next slide. So this graph shows the median days on market for the last 2 years. As you can see, the inventory doesn't even last a month before going into a contract. This is an indicator that Oahu has been in a seller's market for a while. So I mean, it's a great time for the seller, but it's also a great time for the buyer too. With interest rates being still very reasonable, although creeping up. But I'll let Lane talk about that. And yeah,
I
buyers
think
just
the mainland is like what 30 days and above. So I mean,
yeah. So I was looking at Las Vegas, and I think for the last 3 years, I think 15 to 17. And I think 2015 they're like 60 days, and then for the year 2017 they in the 40s. So they're above us, but they're pretty strong market there too.
right. And then Seattle and San Francisco are always leading the country in this, and they're down in like the 10 to 15 range.
Oh wow, yeah, it's nationwide, pretty exciting times. So for you buyer, just be aware that there's a good chance that you're going to be in a multiple offer situation. I've had I think 4 listings in the last 6 months, and 3 of the 4 were multiple offer situations, and all were in contract within a week of the first open house. So
And
yeah,
those sold like, just out of those 4, what was the asking price and how much did
so
they sell for?
there's a range, right? So I think 890 was the highest for single family home, and that was well above asking too. The smallest one was, I think it was 250. But yeah, a lot of times it's great time for the seller, and the seller's agent has a lot of work to do in terms of vetting out which is the best offers, and then trying to find out the good one. In my mind, the agent will get a good backup offer too, right? So then you're countering the first offer, then you're countering all of the backups to make sure you have a solid backup in case the first one drops off. It's a lot of times when you're dealing with financing, that's another challenging part. So that's
Yeah. So when you're playing the seller agent role, are you saying like most of people are offering cash or with finance
um
connected?
yeah, it's for mine, they were actually, one was cash and the other 3 were finance. And yeah, I mean, cash is king, right? So I mean, you don't have to deal with getting I guess like a lot of times in a upward moving market, the challenge is the appraisal. So that's the toughest. And if that falls below the price, and there's no contingency for the buyer to come in with extra cash, then there's a chance that you're gonna fall out. So it's cash is king, and it's great to get a strong backup offer just in case it does fall out. Okay, so the next indicator I wanted to talk about was can you go back one slide? So the months in inventory. So this is another key indicator to determine if it's a seller's or buyer's market. So this is calculated by comparing the listings available over pending sales. And basically, we're trying to find out how many months it would take for the current inventory on hand to sell or deplete. So less than, spell error, but less than 6 months is typically a seller's market, and greater than 6 months is a buyer's market. So let's take a look at what Wahoo stats look like.
Yeah, we're not English majors here. We're CPA, so.
Okay, so months on inventory. Again, this is a 2-year historical. We have condo as well as single family homes statistics on this one. So for both single family homes and condos for the last 2 years, we've had 3 months supply or less. So again, indicating a strong seller's market. And for the people who dialed into the real estate market on Oahu, this is old news. Everybody knows it, but for those of you who are new to the market, just start thinking about, or who are starting to think about selling your place or buying a new home, just be aware that it is very challenging, and make sure you have the right people on your team to take you through to the finish line.
Yeah. What do you think, in March of 2017 there, the condos started to diverge a little bit more than
Yeah,
home.
well,
What happened there?
well, that's the challenge is we're looking at just one snapshot in time, right? So you're talking about what part in the slide? Sorry.
Well, I mean, like, 2016, the single family home and condos, the inventory like really matches each other. They kind of trade hand in hand. But then somewhere around March 17, it kind of diverges.
Okay. Again, though, if you look at, it's very small, right, in terms of
Yeah.
months. So it's hard to say. So a lot of times you say that, for trends on Oahu, the market, like, um,
It's a small
the
island, yeah.
yeah.
Just gets
Well, they say that
skewed.
the condos are the leading indicator. So whatever the condos start to do, then the single family is to follow. But in this scenario, I think the differences are relatively small. So I think it will be interesting though in the future months, especially with the interest rates climbing, but on the other hand, we're entering to spring and summer time frame, which is typically a hot time, seasonally. Yeah,
Yeah.
yeah, yeah. And I guess lastly, before I turn it over to you, I wanted to talk about this slide. Lane, I know you and I are always chatting about the stock market and versus real estate market, and for me, I strongly believe that the real estate market is a great way to diversify um, our investments, right? So on this slide, I just wanted to take a look at the last crash, or the last correction, during the subprime crisis from 2007 to 2009. Totally anecdotal information, right? But I just pulled something together just for perspective, right? So if you see the median single family um, home prices on Oahu from '07 to '09 dipped 11%, versus if we're looking at the S&P and the Dow Jones in that same time period, is the decrease was in the 50s. So I mean, again, it's something to think about, and I guess my point really being that real estate is a great way to get a balance, right? To um, have a good diversified portfolio. Yeah.
Yeah. I mean, people just like to use it as excuse, like, oh, the prices are too high. It's running away from me. Well, I mean, that's been happening since the beginning of time, and it'll continue to run away from you.
Yeah, no, exactly. And I hear people like, oh yeah, real estate is great, but it's not for me or whatnot. But I mean, that's fine. I mean, I just wish they would, have an open eye, or keep an open mind when thinking about things, especially because I don't know. In my mind, real estate is I don't want to say simplified, but I mean, versus you're entering to the stock markets or you buying these stocks or mutual funds, and which you have like no control over. I mean, I guess you have the information and it's highly regulated, but I mean,
Yeah,
yeah.
with all the AI trading and all the bots out there, I mean, it's just an
Oh
unfair
yeah,
game. Yeah,
yeah,
but yeah, for a different discussion for a
exactly,
different
exactly.
website
Yep, yep.
and and forum. So I was gonna talk about the interest rates real quick here. As got a little graph here from 1982. That time it was all the way up to 17.5%. So this latest decade of interest rates were unprecedented lows. 5%, 6%. 6% is high for today, but like, you look at your parents' time. I mean, it was unheard of.
Yep.
And a little bit of how these things work. So the Fed is like the federal bank, and they like to use these monetary policy tools to influence rates. And one of the ways they do that is with U.S. government bonds. Bonds are like debt, and selling a bond is like taking out a mortgage, where the liability is the lender's asset. So when investors, including the federal bank, buy these treasuries, they're essentially lending money to Uncle Sam. You may want to like read this again and kind of digest it, but pretty much what this all does is bids up the price and causes yields to fall, or interest rates. And when people bid less, the price drops and the yields rise. So that's kind of what you're seeing now. And from 2009 to now, you had these things called quantitative easing, or we like to call it QE for short. There was like QE 1, 2, 3, 4, 5. I don't even know what we're on now, but that's why you're seeing the interest rates starting to rise up again and again, because the rates were held artificially low for a decade there as we were trying to get out of that Great Recession. It is another good example. The 10-year Treasury is what tracks the interest rates. If you want to, track it on the Google or the Yahoo Finance, or however you track these stocks prices. But This graph is the same graph that we saw here, but very smaller time frame in the last few months. And when you hear the Fed is shrinking their balance sheet, what's happening is that they're selling their inventory and not buying more. And that makes the rates rise, and what you've been seeing these last few months. China and Japan are the other two players sort of buying this debt. And the main leading indicator of margin rates, as I said, is the 10-year treasury. So if you guys like numbers and you guys like to watch this stuff every day, I don't know why you would want to do that if you like being stressed out, but you can look at this 10-year treasury index. So like I said, there were five major rate hikes since late 2015. The Fed will kind of come on usually on a quarterly basis, I think, and kind of have a big press release, and they'll kind of release guidance on what they're trying to do. But rumors of 4 more to come this year, so more interest rates are coming. And these are kind of the action that's been happening again from the peak in 1982 to today. So I don't know. I mean, I think you got to look at it from your mortgage payment. I mean, when that interest rate raises half a point, I mean it really doesn't change your mortgage payment too much. I mean, I think it's just more excuses not why not to buy. And other news from the streets, there's been a lot of talk about Trump. You love him or hate him, but what he's doing is he's putting money into different industries like steel, for example. And he comes out and he says he's going to be pro steel, and the price of steel just skyrockets. So you can kind of see this as a pro economy news here. But yeah, if there's anything else you want to kind of get out there, Dean?
No, not much. I just hopefully everyone tunes into our channel, and I'm looking forward to getting some new content out there. I think both you and I have a lot of information that I'm looking forward to sharing with everyone.
Yeah, and then we'll scroll all the way back here. And if you guys want to take down Dean's deanueda@gmail.com, he's got his phone number there. I'm sure he leaves his phone on at all times, so you can call him whenever you want. And you can check out my website, simplepassivecashflow.com. My email is lane@simplepassivecashflow.com, and or you can shoot Dean an email here if you guys have a suggestion on any questions you guys have. But yeah, I guess that's it. Good chatting with you, Dean. We'll see you guys next month.
Yep, thanks, Lee.